Hey guys, welcome back to another video, and this time we will discuss about the Ind AS 24, which is a related party disclosure. So before to start the video, I want to tell you that this standard is very important and almost every single company apply this standard. So therefore you should know about the changes between the existing accounting standard 18 and now the Ind AS 24. So in this video what we're gonna do is I will tell you the difference from this book, which is like the Indian Accounting Standard and Overview by the Institute of Chartered Accountant of India. The PDF file of this book is given in the description column. You can check it out and download the PDF file. In this video, I will read out all the major difference between both two standard from this book, and I want to also show you the standard in the PDF form also, like where is the exact difference between both two standard. And I will also give you the example by way of which you can better understand the relationship between the two parties. So this is going to be really long video, so therefore without wasting time, let's start the video. Alright guys, so here's the first difference between the Ind AS 24 and the accounting standard, earlier accounting standard 18. So first difference is like this. Existing accounting standard 18 use the term relative of an individual, whereas the Ind AS 24 use the term a close member of a family of a person. Existing accounting standard 18 cover the spouse, son, daughter, brother, sister, father and mother who may be expected to influence or be influenced by that individual in his or her dealing with the reported entity. However, the definition of close member of a family as per Ind AS 24 includes those family member who may be something like this. So let's take a look at the what exactly this relative is saying and why it is important to determine the meaning of the relative of a person. So this is the existing accounting standard 18. So this is the paragraph number 3, which says this standard deal with only the related party relationship described in A to E. So A to E is this. Clause number D says that key management personnel and relative of such personnel. So therefore relative, meaning of relative is important here into existing accounting standard 18. So let's take a look at the definition of relative under existing accounting standard 18. So it says relative means in relation to individual, means a spouse, son, daughter, brother, sister, father and mother who may be expected to influence or be influenced by that individual in his or her dealing with the reporting enterprise. That is the Ind AS 24, and the related party in this divided into two categories. First one like A and second one is like B. So first category, a person or close member of that person family. So the definition is like close member of that person's family is related to the reporting entity in these three cases, and the next cases is about the entity. So like a person or close member of that person's family is related to the reporting entity if that condition would be fulfilled, and case number B is regarding an entity will be related to a reporting entity if any of the following conditions apply. So like first one is like a person or close member of that person's family. So we should know what is the meaning of close member of that person's family. So definition is given here, like close member of a family of a person are the persons specified within the meaning of relative under Companies Act. You can read it as a 2013 instead of 1956, and that person's domestic partner, children of that person's domestic partner and dependent of that person's domestic partner. You maybe ignore this part, but just the meaning is that the relative means like close member of a family means those which is given definition is given under Companies Act 2013, and the Companies Act 2013 provides the definition of relative in a very broad manner. Lot of people will cover into the definition of close member of a family, while existing accounting standard 18 just cover only few one like spouse, son, daughter, brother, sister, father and mother. But Companies Act 2013 is very wide in regarding the relative, so therefore the term has been changed. Earlier this was the relative of an individual, now the term is a close member of that family of a person, and the scope is very wide for the close member of a family of a person, while earlier the scope of relative is very narrow. So this is the first difference between the Ind AS 24 and the existing accounting standard 18. Now this is the second difference, but before to start the second difference, I want to jump into the third difference. We will discuss about the second difference later on. So it says like existing accounting standard 18 cover key management personnel of the entity only, whereas the Ind AS 24 cover key management personnel of the parent as well. So let's take a look how it is covered. So this is the existing accounting standard 18, and in this paragraph number 3, this is a related parties. Clause number D says that those person is a related party, and who is that person? It says like key management personnel and relative of such personnel, and Ind AS 24 says that this is the list, like paragraph A and then paragraph B. A is regarding the person or close member of that family's person. So clause number C says that a person or close member of that person's family is related to the reporting entity if that person is a member of the key management personnel of the reporting entity or of a parent of the reporting entity. So therefore, if a person is a key management personnel of a parent as well, then those key management personnel will also be the related party to the reporting entity. But earlier it says just like key management personnel, not the key management personnel of the parent. So therefore this is also a difference. And then it says like Ind AS 24 also cover the entity or any member of a group of which it is a part providing key management personnel service to the reporting entity or to the parent of the reporting entity. So this is quite complicated language. So let me explain you by a simple word and by way of example. So like this is the clause number A, then this is the clause number B. So clause number B is regarding the entities. So an entity is related to the reporting entity if any of the following condition apply. So clause number 5th and like clause number 6 and 7th is regarding the key management personnel. It says the entity is controlled or jointly controlled by a person identified in A. And what is the person identified in A? Identified in A like these persons. So let me explain you this by way of example. So example is like this, like entity A is controlled or jointly controlled by Mr. X. And who is the Mr. X? Mr. X like reporting entity in which the Mr. X or his close member has control, significant influence, or the member of the key management person. So if Mr. X has the control or jointly control over the entity A, and Mr. X or his close member has the control or significant influence or the member of the key management person, then reporting entity and the entity A in which Mr. X has the control or jointly control will be the related to each other. So this paragraph is saying like this: the entity is controlled or jointly controlled by a person identified in A. So person identified in A is like this person, and then if another entity like A is jointly or controlled or jointly controlled by same person, then these two entities will be related to each other. And then clause number 7 of this one is saying a person identified in A subclause number 1. So A subclause number 1 is like only person who has control or jointly control over the reporting entity. So a person identified in A subclause 1 has significant influence over the entity or is a member of the key management person of the entity of a parent of a entity. So it's saying like this is second example. So like Mr. X has a significant influence or member of a key management person of the entity A, and also reporting entity in which the Mr. X or his close member has a control or joint control. So if Mr. X has a significant influence or member of a key management person of entity A, and Mr. X also has the control or joint control over the reporting entity, then reporting entity and the entity A will be related to each other. So that clause is saying you like this: a person identified in A1. So person identified in A1 is like this. Just the control or jointly control is the clause A curve 1, and then A1 has the significant influence over the entity or is a member of the key management person of the entity. Like this, Mr. X has the significant influence or member of the key management personnel of the entity A. So therefore, if Mr. X is like this here, control or joint control, and then Mr. X has the member of key manager personnel of the entity A, then entity A and reporting entity will be related to each other. So this is the third difference regarding Ind AS 24 and the existing accounting standard 18. Alright, this is the fourth difference, which it says like under Ind AS 24 there is an extensive coverage in case of a joint venture. Two entities are related to each other in both their financial statement if they are either co-venturer or in a venturer and the other is an associate, whereas as per existing accounting standard 18, co-venturer or co-associate are not related to each other. So we will not understand this by way of only this one. We have to figure it out what is exactly written into existing accounting standard 18 and Ind AS 24. So this is the paragraph which was relating to associate or joint venture under existing accounting standard 18. So paragraph number B says you associate and joint venture of the reporting entities and investing party or venturer in respect of which the reporting enterprise is an associate or joint venture. So you will be related only like if the other entity is associate or joint venture of the related reporting entity and the investing party or the venturer in respect of which the reporting enterprise is an associate or joint venture will be related. So only two things or two entities can be related under existing accounting standard 18. Just those entities which are associate or related or associate and joint venture of the reporting entity, or the investing party or the venturer of the reporting enterprise can be the related. Now Ind AS 24 has a lot of coverage regarding the joint venture or associate. It says like one entity is an associate or the joint venture of the other entity. So two entity will be related if like one entity is associate or joint venture of the another entity. So here's an example of it, like a reporting entity is there and then the entity A is there. If both are joint venture or both are associate to each other, like reporting enterprise is a joint venture of A or reporting entity is the associate of A, then those two will be related to each other. So this clause is saying you like this, and bracket is also there which is quite complicated, like or an associate or joint venture of the member of a group of which the other entity is a member. So like an associate or joint venture of a member of a group of which the other entity is a member, like other entity is a member of the group and that reporting entity is associate or joint venture of the member of the group. Let me explain you this by way of example because this one is quite complicated. Like this, suppose entity H is there and entity H is a holding or subsidiary of entity number A. So holding a subsidiary in Ind AS 24 says you like member of a group. So you can say member of a group means holding a subsidiary. So entity H is a holding or subsidiary of entity A, and then entity H is also associate or joint venture of the reporting entity. So if the like reporting entity is a joint venture or associate with entity H, and then entity H is a holding or subsidiary of like entity A, then those two entity like entity A and reporting entity will be related to each other. So it says you like this, associate or joint venture of the member of a group. So like member of the group of which the other entity is a member. So like member of the group of which the other entity is a member, like other entity is a member of the group, of which the reporting entity is a joint venture or associate. So this one, instead of remember this paragraph, you can just remember this example because that will be quite easier for you to understand the relationship between those two entities. And then clause number 3 is also there, like both entity are joint ventures of the same third party. So here's an example like this, like third party is there and third party has the joint venture with entity A and the reporting entity, like entity A is there and reporting entity is there. So third party is the joint venture with both two entity, then these two entity will be related to each other. And then clause number 4, one entity is a joint venture of the third entity and the third other entity is the associate of the third entity. So here's an example, like third party has a joint venture with entity number A. So with this, the third party has the connection of joint venture, but the third party has the connection with the reporting entity as a associate with the reporting entity. Then also these two cases will be covered into the related party. So earlier this thing was not there, like this one, and then this one was also not there, but under Ind AS 24 this one is also covered, like this clause, and then this one, and then this one was not there earlier, but now under Ind AS 24 extensive coverage is regarding the joint venture. So therefore it is say like under Ind AS 24 there is extensive coverage in case of a joint venture. So this is the fourth difference, which is also very important in respect of those two standards. Next difference is not much relevant to you guys. So it says like existing accounting standard 18 mentioned that there where there is an inherent difficulty for management to determine the effect of influence which do not lead to transaction, disclosure of such effect is not required, whereas Ind AS 24 does not especially mention this. Paragraph 18 of Ind AS 18. So like paragraph 18 is there, but before to start or read this one, we have to also take the context from paragraph number 17. So it says like the operating result and the financial position of an entity may be affected by the related party relationship even if the related party transaction do not occur. So like operating or financial result of an enterprise may be affected by the related party even if the related party transaction do not occur. The mere existence of the relationship may be sufficient to affect the transaction of a related enterprise with the other parties. So here's an example how even if there is a no related party transaction, even if the operating result or financial position of an entity may be affected, like this. A subsidiary might be instructed by its holding company not to engage in research and development. So because holding company is instructing to the subsidiary company not to engage in research and development, so because of this decision the operating and financial position of the subsidiary can be affected and majorly affected. But paragraph number 18 is saying like because there is an inherent difficulty for the management to determine the effect of influence which do not lead to transaction, because like holding is saying the subsidiary that do not engage in research and development. Another question is how you can determine the quantity or the amount due to which the subsidiary occurs the financial or operating losses. So no, you cannot determine the related party relationship amount in this case. So therefore paragraph number 18 says you because there is an inherent difficulty for the management to determine the effect of influence which do not lead to transaction, so disclosure of such effect is not required by this standard. So this is a clarificatory words, but this paragraph is not mentioned under Ind AS 24. So it means like in those cases where there can be effect in the financial or operating result of an enterprises, and this kind of a thing is influenced by the related party relationship. So this thing will also need to be disclosed under Ind AS 24. But earlier there was a clarity like disclosure of such effect is not required, but now because there is no such paragraph, so we can conclude that you have to now disclose such effect due to which there cannot be any transaction with the related party. So this will also be disclosed here. So that's why paragraph number 5 is also there. Now let's take a look at the next difference, which says like existing accounting standard 18 does not especially cover entity that are post employment benefit plan as related party. However, Ind AS 24 especially include post-employment benefit plan for benefit of the employees of an entity or its related entity as a related party. So like this is the Ind AS 24, and this is like clause number B. An entity is related to the reporting entity if the entity is a post-employment benefit plan for the benefit of the employee of either the reporting entity or an entity related to the reporting entity, but that thing was not there under existing accounting standard 18. And the next difference is like Ind AS 24 requires an additional disclosure as to the name of the next most senior parent which produces consolidated financial statement for public use, whereas existing accounting standard 18 has no such requirement. Paragraph 13 of Ind AS 24. This thing is not much relevant for you guys. Let me explain you why. Like this paragraph says you relationship between the parent and its subsidiary shall be disclosed irrespective of whether there has been transaction between them. This thing was also earlier. An entity shall disclose the name of its parents and if different the ultimate controlling party. So you have to disclose the name of the parent, and if there is no name then the ultimate controlling party. So this thing will be very rare, and if neither the entity's parent nor the ultimate controlling party produces consolidated financial statement available for public use, the name of the next most senior parent that does so shall also be disclosed. So this thing will not be applicable to most of you guys, so you can forget about this, about this difference which says like additional disclosure as to the name of the next most senior parent which produces the consolidated financial statement for public use. Next difference is regarding this one, like Ind AS 24 require extensive disclosure for compensation of KMC under different category, whereas the existing accounting standard 18 does not especially require. So this is the Ind AS 24, and paragraph number 17 says you an entity shall disclose the key management personnel compensation in total and for each of the following categories. So this is the extensive disclosure requirement like for the key management personnel, but no such requirement was there earlier under the existing accounting standard 18. And then the next one, like Ind AS 24 require the amount of the transaction need to be disclosed, whereas the existing accounting standard 18 gives an option to disclose the volume of the transaction either as an amount or as an appropriate proportions. So this is the existing accounting standard 18. 24 paragraph number and clause number 4 says you like you have to disclose the volume of the transaction either as an amount or the appropriate proportion, but under Ind AS 24 you have to disclose the amount of the transaction, not the proportion. Like earlier you can also disclose the appropriate proportion, but now you have to only disclose the amount of the transaction. Next difference is regarding the government entity, so we will discuss it when we will discuss about the second point, and we have left this now. So before to start this point we should take a look at this next and last point, which is says like existing accounting standard 18 includes a definition and clarificatory text primarily with regard to the control substantial interest including 20% threshold and the significant influence including 20% threshold. However, Ind AS 24 neither defines those terms nor it includes such clarificatory text and allow respective standards to deal with the same. Now what it says like this is the existing accounting standard 18. So definition is there. Significant influence means the participation in the financial and or operating policy decision of the enterprise but does not control of those policies. This is the definition as per Ind AS 24. Significant influence is the power to participate in the financial and operating policy decision of an entity but is not control over those policy. Significant influence may be gained by share ownership, statute or government. So it says like it can be gained by share ownership, but how much amount, no idea. But earlier accounting standard 18 give you the clarificatory text also regarding the significant influence and the substantial interest. Like significant influence may be exercised in several ways. For example, a lot of example was there. So one of the example like 20% or more of the voting power of the enterprises, but this clarificatory note is missing into Ind AS 24. Just it says like it can be gained by share ownership or statute or agreement, but the thing is that significant influence means the power to participate in the financial or operating policy decision of an entity. Now we should take a look at the second paragraph which we have left. So this is says like existing accounting standard 18 define state control enterprise as an enterprise which is under the control of the central government and or any state government. However, India's 24 there is an extensive coverage of government enterprise and it defines a government related entity as an entity that is controlled, jointly controlled or significant influence by the government. Further, the government refer to government agencies and similar body, whether local, nation or international. Not much relevant for you guys. Simply standout entities definition is there, and now the wording is like government related entity, and government means is itself defined into Ind AS 24. And related to this paragraph, there is also one paragraph like 10 which is says like Ind AS 24 require disclosure of certain information by the government related entities, whereas the existing accounting standard 18 presently exempt the disclosure of such requirement. Not much relevant for you guys. Just you can simply take a look at this paragraph and you will understand. Not much relevant for you guys. So this is the difference between the Ind AS 24 and existing accounting standard 18. Alright guys, so that was the difference between the existing accounting standard 18 and now the Ind AS 24. I know there is a lot of difference between both the standard and it is also very important one. So the link of again that document from where I was telling you about the difference is in the description column, and also the example like the joint venture cases which I explain you in a separate document is also in the description column. You can check it out, and that will be also very benefit for you. And subscribe to this channel and also share this video to your friend who are still wondering what is the difference between the existing accounting standards and now the Ind AS. Share this to your friend. If you like the content, please like the video and also subscribe to this channel, and keep posting and like share into Facebook or to your friends WhatsApp group and something like this, because you know that Ind AS is very important. And I will also like upload more videos into this channel regarding every single accounting standards, and also I will show you the disclosure requirement by giving you the live example from the annual report of a lot of companies. So this is the end. We will meet again in the next video. Till then, bye bye.